which has not done well this year, is currently trading at the lows of the day. But seems like maybe Allahabad Bank is taking note of the fact that it may come out of the PCA norms, a story that Sapna just spoke about a few minutes ago. And that is the one which has moved to the high point of the day. All the other contenders unchanged. With that, we move on to a query. This one comes in on a public sector bank itself. We have Milan Thakkar, who writes to us from Ahmedabad, wants to buy shares of SBI for the short term. Wants to know when would it be the right time to enter. Vijay, you've been talking about banking stocks. Do you think SBI is a right bet for our viewer?
Well, I think so. The stock has been in consolidation mode since last couple of months, and I think that this present move should take it to 330 odd. And mind you, as I said earlier, be with the larger banks. So SBI, so to say, is the largest bank in the country. And I think that, it has a very strong case with the government trying and going overboard to settle the NPA issue and the banking woes every now and then. Even the Prime Minister is addressing this personally, and the PMO is intervening in this every now and then. I think that, banking should be the theme of 2019, and irrespective of the fact which government comes, I think that banking should be the backbone of recovery for 2019. So I'm fairly bullish on banking, and I think the larger banks should do well. SBI, first target is 330, next is 360.
All right, gentlemen. Vijay, Rajat, thanks very much for joining in and for advising all our viewers. With that, it's a wrap on your stocks. Do stay tuned. The last hour of trade comes up with closing bell.
The yen is holding steady at around that 108.5 odd mark. But the Nikkei, that's down close to around 1% as we speak.
Those are buying opportunities. 9 times the Nifty is halted at 10,900 to 11,000.
We started the process 2 months back, and we've met several strategic partners since then.
10,902 is what you have on the Nifty right now, 10,905.
Market is expecting very strong earnings growth in FY20.
While we have grown 30%, we expect the growth to be more than 20-25%.
He's ready to release $35 million immediately and then the rest of the money, but he wants to bring it at 150 rupees a share.
The Nifty is just about hovering at around 10,900, up around 15 odd points.
The proposition that coalition governments will not and cannot deliver good results is simply not true.
State Bank of India, which is the largest member in the consortium, coming ahead and saying that they want to sell their exposure of over 15,000 crore rupees.
25 points on the Nifty, 10,912.
Okay, once again playing absolutely as per script. 10th time the market's gone to 10,900 and it's proving as a bit of a resistance. This is closing well. I'm Anuj, with me is Surbhi. Hi Surbhi, good afternoon.
Good afternoon, Anuj. A bit of a resistance. 10th time, and you've been keeping the count for us, really.
Yeah.
I mean, usually they say in market technicals that when you keep testing a pattern repeatedly, at some point it breaks. But this time, I mean, this 10,950 level, I don't know what to say.
I'll tell you one thing, Surbhi, it's been a good market. I think the market could have easily collapsed from here. That hasn't happened. So that way, look, the market is not obliged to, you buy yesterday afternoon, the market's not obliged to give you returns today. It never should be the case. This again emphasizes the importance of risk reward. Where you should buy and for how long should you buy. Momentum chasing is not going to work, but I have no doubt in my mind, going by the pattern, that this market is in an uptrend because, perhaps this looks like this time perhaps, 10th time or 11th time, whatever, this time perhaps you go there and if you're not slipping too much from there, then I think with a gap or whatever, perhaps maybe not tomorrow's weekly options expiry, maybe on Friday, maybe on Monday, that pattern is indicating that you are ready to break out. Just look at the pattern of the market. And the current rally started on the election day result, right? Remember when we spoke about the fact, state election, that you buy today and you don't need to buy after that. That day low was 10,330. Let's make it 10,350 for ease. After that, on Boxing Day, 26 December, the low was 10,550. I think 3 or 4 days back, the low was 10,750. So progressively, the lows have been higher. You know, you bought at 10,350, you made a lot of money. 10,550 also you made money. 10,750 also you made money. Now it remains to be seen if 10,750 is indeed the higher bottom. The top of 10,950 has remained intact.
That's the thing. The higher highs have also not happened.
But that's okay. As I said, it's perhaps the market lacks triggers to break out. But to be fair to the market, it's not broken down as well. So let's see. I think the larger trade is still to buy the dips. And the market's got good things going for it. This Infosys, which is supporting, Reliance has been seeing buying. I think ICICI Bank, we all know, is a leader for the market. So, if you look at the market breadth, it's not too bad. 2:1, 1.5:1. That's okay. So the issue was just about today. After a big trend day like yesterday, next day normally you expect some kind of consolidation, which is healthy for the market, and that's what the market has done today.
Okay, that's what seems to be happening. By the way, yes, Bank is doing what it's been doing for the last couple of days. Look at the stock; it's a day's high on that one, 207 and counting on Yes Bank. Big surge underway. Anuj, any specific signs from the futures and options market about what we might be looking at next?
I'm picking an interesting anecdote, and I would want people who know this data more than me to help me on that, and I'll try to understand. I was looking at this June 5,000 call. Now someone sent me a message that you should look at this. What's happening here? Now this 5,000 call of June. Nifty is at 11,000. So first of all, it has no business trading. If you see all the months, all the strikes, you will have zero liquidity. Not only is it trading, look at the open interest, 12.7 lakh shares. Now, 12.7 lakh shares is the kind of open interest that, if you go by even the current series, not too many strikes would have. I mean, obviously, you'll have strikes with open interest of 35, 36 lakh shares, but those are, like very close to the current market move or current market price. For 5,000 call to trade this kind of volumes and the Nifty has gone up 7 points today. This one's gone up 26 points, the spot. You add 5,000 and the strike value, it works to roughly somewhere around 10,869, 870, current price. I don't know what it is, frankly speaking. And, I don't want to speculate too much. But this is just one data point that I thought I'll put on board because it's perplexing. I'm not able to understand. So that's why, I'll put it on Twitter as well. I'll talk to some people. I would want to know what exactly is happening here.
What would this call writer or, for that matter,
this is obviously
buyer
syndicate
thinking?
trade. This is obviously market making. Someone's, there must be some broker involved who's got a buyer and a seller. It's a syndicated deal, obviously. But it's interesting. I think, over the next few days or weeks, I would look at this stat and see, what's happening here.
Okay, well, we'll keep that in mind as well. Let's get started. There's a lot of ground to cover. This is what's lined up over the next 1 hour on Closing Bell. The market has erased its morning gains. It's now absolutely at that flat line, dragged lower today by the likes of HDFC, ITC and even HUL. Infosys, ICICI Bank and Reliance Industries have been providing some support to the market. The Jet Airways stock, meanwhile, tanks almost 6-7% in trade after Etihad says it is willing to invest additional equity in the airline only at 150 rupees per share. It also wants SEBI to exempt it from having to make an open offer. We will discuss, of course, this stock and many others and all the key trends with the experts, SP Tulsian of sptulsian.com, independent market expert Amrish Baliga and Dilip Bhatt of Prabhudas Leeladhar. Now, our mid-caps looking interesting again. And what are some of the ideas perhaps you can work with if you have a slightly longer-term horizon on the market? We ask our alpha manager for the day, Viraj Mehta, head of PMS and fund manager at Aquarius Securities. And as always, lots of trading ideas coming your way with the technical experts, Ashwini Gujaral and Mitesh Thakkar.
Okay, as we speak, the Nifty is back into the green just by 8 points. The Bank Nifty has outperformed today because of IndusInd Bank and Yes Bank. Of course, ICICI Bank also, though that's off the highest point of the day. Ashwini, good afternoon. Your thoughts for last hour and what would be your stock calls?
See, my take on today's action is that supply at 10,950 is drying up. And if supply there dries up, then 150, 200 points is a given. So even if you don't have positions right now, get long on options, on futures, etc., whatever you can manage, And my sense is that I don't think this is very serious selling. On the futures, the high and low is 30 points apart. So that way, I want to buy in all the stronger stocks, Infosys, ICICI Bank, Reliance, what have you. And finally, I think that we will come out on the upside, maybe with a gap, maybe because of results, and then that opportunity will be lost. The other interesting stock I'm looking at is Indigo, which is trading almost at the highs of the day, with the disclosure that we have call positions here. I think it's just starting out a large rally, so that's something people should look at. On individual stocks, basically, if you stick with the stocks which are moving up consistently, that gives you good risk reward trades. EIL is a sell, and that's a sell from its 200-day moving average. So this is a sell with a stop of 124, target of 116. Repco Home is consistently moving higher for some reason. That's a buy with a stop of 435, target of 460. And Indian Bank is a buy with a stop of 454, target of 268.
Actually,
254, target of 268.
Okay, that's Indian Bank. Actually, lots of PSU banks have gotten excited again. Our colleague Sapna just came out with details of the story on recapitalization and how the next tranche of the money will come in. That's the PSU Bank Index. United Bank of India, for instance, 11% on the upside. Other names, OBC, PNB, all of those stocks are moving higher. Let's go forward and get trades in from Mitesh as well. Good afternoon, Mitesh. How are you reading today's slightly sluggish session and your ideas now?
Yeah, good afternoon. So, to be very honest, not really worried about the fact that we have had a very subdued sideways kind of a session for two reasons. One, after yesterday's rally, I think we had kind of moved away from the intraday averages, and I think we're still not below them. They're still rising. The indicator setup is still on the positive side. So maybe even if there's 1-2 days of consolidation, I wouldn't worry. I think that will be kind of markets gathering strength by being sideways at higher levels and then suddenly breaking out of the 10,950 zone. So I still believe that as long as we're not going below 10,850, the chances are that we'll break on the upside. Once that happens, 11,080, 11,100 could happen. So in that sense, maintaining a positive bias. Though I have one sell and one buy call. Concord is a buy with a stop at 684 for targets of 725, and Gas Authority, that's a sell call with a stop at 333 for targets of 310.
Okay, those are some stock calls. The other intriguing bit about today's trade has been that if you look at tomorrow's expiry on the Bank Nifty, the Bank Nifty up 100 points, the call prices are actually down. Which is very interesting because 27,700 and 800 calls are down a lot, of course. That perhaps is something you can explain. But even something like a 27,600 call actually is down quite a bit from 90 thereabout. It's actually down to 67 or so. SP Tulsian of sptulsian.com and Amrish Paliga now with us. Good afternoon. Mr. Tulsian, I wanted your thoughts first on a stock that's made a decent move today, that is Interglobe. Of course, for now, the market's assumption is that, Jet's loss is Indigo's gain. Your thoughts here?
Shanuj, maybe combination of both the factors that, yes, the positive view is building on aviation sector because of the weakness seen in the Brent prices. And secondly, yes, you are right that people are, but I don't think that the extreme view can be taken that people will be seeing that Jet closing down and the entire business is getting shifted to Interglobe. But maybe yes, because people may feel that the passengers will be little careful or little wary in taking the bookings on the Jet Airways going ahead, and probably that may give them a benefit of the higher market share in the interim period. So that could be the reason. But otherwise, also on a valuation parameter, also it holds the valuation to buy the stock at the current level.
Okay, I think DCB Bank's numbers flashing on the screen now. While the net profit number is looking good, let's wait for the asset quality as well. I think that will be important. The gross NP has gone up actually, 1.92% versus 1.84% quarter on quarter. I think that's not something which the market will like. Also keep in mind, this is a stock where you have long positions. For last many days now, you've consistently seen one-way buying in DCB Bank. So, it won't surprise me that, if you now see some profit taking, because, the NII is pretty much in line. I think net profit, this was the whisper number in the market, I think, Surabhi. And if you see the chart of the stock over the last 7 or 8 days, it's seen quite a bit of rally already. I think the gross NPA has gone up in absolute number as well, from 410 crores to 445 crores or so.
Yeah, let's see how we get more details. I mean, Abhishek was telling us that we have to watch for the margin profile as well, because the margins have been under pressure over the last quarter. So let's see if they've managed to arrest that trend. As of now, that NPA number is definitely a bit of a tinge of sort of red on that account, but otherwise NII is in line, and DCB Bank is now reacting sharply on the way down. Ambarish, since we're discussing this one, any thoughts on this stock, DCB Bank?
Yeah. DCB has surprised negatively in the recent past, if you're talking of the last 2 or 3 quarters. So I think people will really go through these results with a magnifying glass before really taking it at face value. So and again looking at the sort of asset quality deterioration to a certain extent. So I think we should see a bit of a correction, but for this stock to actually break out from this range, I think will require consistently good results, at least for 2 or 3 quarters, which I think is still some time away.
Okay, Mr. Hussain, your thoughts? Of course, these are prima facie, just the first numbers.
See, Anuj, one has to really read the commentary of the management, because they have given a retail credit growth of about 25%. They expect the book to double in the next 4 years or so. And I don't think that the asset quality seems to be so disappointing, because if you take on a net NPA front, it has just risen by 1 basis point, which is seen acceptable. One has to really understand, and in fact, maybe on the PAT front, the PAT has increased by about maybe about 8 to 10 crores. And if I go by the valuation parameter, in fact, we have been keeping the positive call on the stock, and it has risen also. So maybe some profit booking may come in, but I think after seeing these numbers, there should not be any kind of disappointment, because on a price to book also, 1.9 time price to book is seen quite reasonable, with a book value of closer to about 90 rupees. And I don't think that there should be any kind of disappointment. Even if the profit booking comes in, I think it will get swiftly bought back, because the stock has risen in this last couple of weeks on expectation of better numbers. So any short-term weakness or corrections, which comes in the form of profit booking, should be bought into.
Yeah, I think that point Mr. Tulsen is making is has to be re-emphasized. When I said that a stock might be in the red, that's purely because of the market positioning. I think if you see the 2-week chart of DCB Bank or 1-month chart of DCB Bank, and in earnings season it happens to be. Sometimes you just look at that stock. Over the last 1 month, it's moved up 12%. Don't tell me that there
in an underperforming market.
Exactly. From 158. Obviously, there's there are long positions in the stock ahead of the numbers. What you've seen is first round of profit taking. At some point, of course, it will bottom out. But overall, the numbers are okay. It's just that there's a minor, if you want to nitpick, increase in the NPA number. But more importantly, the market positioning is such that because the stock had rallied so much, the first thought would be to book some profit, and that's what's happened, I think. Yeah.
Okay, that's DCB Bank for you. The other one that's actually, interestingly, very bad number if you're looking at Q3, HT Media. Yet the stock is seeing some buying. You could argue it's already been such a dog of a stock over the last several months that maybe now with this whole talk of higher prices and what we know from the government hiking ad rates. So I think the numbers are just a hindsight.
The backward-looking number, I think the stocks, because you've seen a bit of a re-rating in print media stocks. Today it gave you that opportunity based on numbers.
And
someone just slapped up. Yeah, exactly.
Yeah. All right, interesting result reactions over here. We'll take a quick break. Before we take that break, since we were talking DCB, we actually have Abhishek joining in. Abhishek, what's the lowdown and any word on the margins?
See, the lowdown clearly, Surbi, is the fact that, the asset quality has deteriorated. So in absolute value, you have already mentioned that 445 crore is an uptick of close to 9% on a sequential basis. If you look at the margins, if I do a back of the envelope calculation, it looks to remain stable on a sequential basis. So last quarter, it was at 3.83%. And even in this quarter, the loan growth, if I do the back calculation with net NPA divided by net NPA ratio, the loan growth comes to about 4 to 4.5% quarter on quarter, and that's in line with the NII growth. So margins have remained stable, while hiccup in the asset quality, we don't know the exact details. It looks like more of slippages and less of recoveries, which has hurt the gross NPA. Back to you.
Bank Nifty up about 0.5%. The Nifty is trying very hard to hold on to the 10,900 mark. That's where the tussle is for the time being. Sandeep Bagle is joining in with some more trading bets. Good afternoon, Sandeep. Long or short, which way are you going today?
Afternoon, Surbhi. I think the market is on the way up and I would be long. I would buy a Torrent Pharma, stop loss of 1917, target of 1980. And a buy in a Container Corp, stop loss of 687, target 738.
And any disclosure, Sandeep?
Well, I don't hold any positions in the stocks that I have discussed, but it is safe to assume that our clients may be holding positions in the same.
Okay, Sandeep, thanks a lot for those trading ideas. A couple of these textile names making highs of the day. Arvind is at the high point of the day, and Century Textiles is also at the high point of the day. So these two stocks sort of seeing a bit of a buying interest right now. Just pull out Century Textiles, that one's moved to high point, and Arvind as well right now at the high point. Mr. Hussain, of course, your view on Century Textiles is well documented, but I wanted your thoughts on Arvind. It's corrected quite a bit.
Anuj, firstly, just on a lighter side, I don't think that Century Textile has anything to do with textile. The component on top line and bottom line may not be even 5% of both. But yes, coming back on the Arvind, the stock having, after having gone hived off and restructuring happened since then, it has been going down. So maybe just some kind of, and the Trident results, which has a textile division also apart from that paper division, maybe, some kind of buying and short covering may be seen, but otherwise, I don't find any reason for Arvind, because I have been saying this prior to demerger also, that the major valuation has gone into the branded retail segment, and I don't think that you have anything to do with the existing Arvind. Maybe just it's a technical short covering or maybe technical bounce, but on Century Textile, yes, it has a lot of investment potential, maybe because of its paper division and real estate division.
By the way, we've already discussed this, is Jet's loss the others gain. Interglobe and SpiceJet is now giving it good company. Big surge on the other two airlines with all this concern and all this talk of maybe some of the jet planes getting grounded. Look at that move on SpiceJet, and Interglobe is now piling on more momentum and more gains. Mr. Tulsi, and I wanted to discuss these two stocks, NIIT and NIIT Tech, because now there's formal disclosure. NIIT has said that they're considering a stake sale of their holding in NIIT Tech. How would you look at both the stocks and what's your view?
See, I think NIIT Tech has already captured that value on the expectation of the stake sale. Now coming on NIIT, unless until we really know the intention of the management that how that funds will get utilized, there is no point in taking a call, because ultimately even if once the deal get consummated, which may take about 6 to 8 months time, and then the money will come in, and how it will be the utilization, because in the past maybe in the diverse sector or diverse companies we have seen where the investors have got strapped because of the non-utilization of the cash or the sale proceeds in the form of distribution to the shareholder. If the money is remaining with the company, with NIIT, and if it is not used properly, then that can also be proved to be the loss-making proposal for the existing investor. So NIIT Tech has already captured the value. NIIT, I won't be taking a positive call as of this stage.
Okay, fair enough. NIIT is something we'll not take a positive call right now. Z Entertainment is making lows of the day, and how? Just pull out that stock intraday. I think perhaps what would have happened here is once again one of those cases where some adventurous longs have been trapped here. Your thoughts, Ambarish, on this one, Z Entertainment?
In fact, the earnings have been good, no doubt, but then I think it's going to be more of that overhang of the expected sale by the promoters. So I think unless there is decent amount of clarity which comes on that, I really don't see the stock moving up much more from here. I think it's going to be just range bound, plus minus possibly 5-8% here and there.
Okay, Mr. Wilson, we will thank you on that note today, and of course we'll have a conversation with you tomorrow. Tomorrow is of course a big day as well. The Reliance's numbers will come out. By the way, the Nifty has taken a bit of a knock, from the high point. The Nifty futures, that is, it will not show you on the Nifty index chart, but if you see the futures, and the premium has come off a bit because it's actually down. We started the day, I think we were 40-point premium on Nifty futures. It's down to 30 points now. And same thing with the Bank Nifty. In fact, tomorrow's 27,600 call, and that's just about 100 points from here. The premium is down 23% on that. Sometimes these things tell you a lot about what the smart money might be doing. So there's a massive amount of call writing which is happening already. Perhaps yesterday's surge in call prices helping the call writers to write these calls. That could be happening right now. In fact, on the Nifty now, if you see the futures candlestick, you will see that the last 5 minutes or so, there's been about a 25-30 point decline, and the last decline, the bar is actually quite big. Viraj Mehta is with us, head of PMS and fund manager at Equiris. Excuse me. Viraj, hi, good afternoon. First of all, Happy New Year to you. I think we are talking first time this year. So, as a fund manager, you hope 2019 is, of course, better than 2018. But your thoughts on how to play it?
Yeah. So, Happy New Year, Anuj. So our thought, and we had written a letter to our investors. What we think will happen in 2000, or what we expect could happen in 2019. So if you look at last year index, small cap index and mid cap index as a whole underperformed the largest mid caps and large caps significantly. So if you look at the premium at which they were trading, probably 2 standard deviations away from their normal valuation or normal premium to the large cap, they were now trading at a discount, small cap index, if you just take out the PSU banks, which are a part of that index. Now, going forward, we think that all the macro tailwinds are more or less, in line with what we expect. Mostly earnings of a lot of these companies are significantly better than what the market expected. So going forward, and the valuations of a lot of these small caps are very, very reasonable. So I think the entire delta that large caps generated over a period of last 1.5 years, we think it has a reasonable possibility of reversing. Also, volumes, stock volumes tell you a lot of things. So small caps had huge volumes in 2017, a lot of which actually reversed in 2018. By the time last couple of months happened in 2018, volumes of small cap stocks were down 40, 50, 60% on an average. You couldn't sell anything even if you wanted to, or you couldn't buy anything now if you want to. So we think almost all the selling which had to happen for small caps has happened. And now if you pick and choose good businesses, I think they will significantly outperform over next 2 years compared to the large cap peers.
So you've got some interesting picks, Viraj. Good afternoon, and of course, season's greetings to you. You've got some interesting picks. Before we get down to those stocks, yes, of course, it's small caps. It has to be entirely bottom up. But is there still, relatively speaking, is there a pocket as a whole where you're looking for attractive opportunities? I don't know if it's auto ancillary in this, sell down, or is it specialty chemicals that seems to be your favored area?
So I would say auto ancillaries, we have no exposure, and we think auto ancillary as a pocket, if you look at last 15 years numbers of there, they are significantly overvalued compared to their average valuation in an era where you are seeing very high growth for four-wheelers and CVs, and which is beginning to taper off. So we have no exposure to auto ancillaries, but we do like certain specialty chemicals, agrochemicals. We also like certain capital goods. Though there are not too many private sector plays in capital goods, but we like selectively a couple of companies there. So on a top-down approach, these will be few sectors that we really like.
Okay, let's discuss some of your stock ideas. Excel Crop Care is a stock that you like. Just give us the rationale, because some of these stocks, the story looks good, but it hasn't really played out.
So, Anuj, if I just take you back a couple of years when this company was, or 3 years when this company was acquired by Sumitomo Japan, if you look at the company then and if you look at the company now, the company has significantly changed both in terms of product profile, in terms of margin trajectory, in terms of working capital. So today, if you look at this company, it is now, and what has also happened is that Sumitomo has merged it with its private entity that it already owned in India. So now we are looking at this company as the second largest domestic agrochem manufacturer with potential of introducing newer products which are patented, which have far more larger scale that they can address. And they have API or they have intermediary technical manufacturing capability as well. So when technical prices in China go up, they are not completely insulated, but they get protected to a reasonable degree due to their own backward integration. So today we are looking at an entity which is around 2,300 crore revenue, which is growing much faster than the market by probably 3 or 4, 5 percentage points, which is gaining market share. And if you look at the margins, today the margins are 11%, but over next 3 to 4 years, we think the margins can go to around 18 to 19%. So that's the delta we are looking at it in this company. And the combined entity today trades at around 3 times sales and around 17, 18 times EBITDA. We don't think that's a very expensive multiple, and EBITDA is understated to that extent because the margin improvement is still to happen. So we have been invested in this for some time now, but we think this has some long way to go before it realizes its full potential.
Since we're talking of sort of specialty chemicals, agrochemicals, and that kind of a play, another stock that you seem to like is alkylamines. And here I was reading your notes. So the rationale seems to be that they really enjoy, a duopoly. There are only 2 players in the market, and alkylamines is one of them. But the stock has run up so much, Viraj. So isn't that a risk if someone buys now?
So let's look at the numbers. So last year, the company did around 65 crores of profits. This year, after the expansion is over, we are looking at close to 88 to 90 crores of PAT. For a company which is a duopoly, is expanding capacity at around 18 to 20% CAGR. If you look at the gross margins, they've been consistent for last 15 years. You are getting that company today at close to 14, 15 times current year multiple and close to 12 times FY20 multiple for an ROE which is close to 26-27%. So a duopoly business where the profit pool is extremely concentrated and protected. The return on equity and the payback for the projects is very, very good. It's less than 3 years. And growth potential is significant because the agrochem and pharmaceutical volume growth is yet to pick up significantly. So you have all the ingredients of re-rating. Yes, the stock has gone up, but in terms of absolute valuations, we don't think it is expensive.
Okay, before we discuss the third stock, just wanted your disclosure on both Excel Crop Care and this one, alkylamines.
So all the 3 stocks we talk, they are probably in our top 3, 4, 5 positions in our PMS. So including me, my family, who are part of the portfolio management services, and all my clients have these stocks.
Fair enough. So let's discuss the third one now. APL Apollo Tubes. What are the targets here? What are the strengths? What are the threats here?
So this company is now the largest player of ERW tubes in the country, and the second closest competitor is not even half its capacity, which is Surya Roshni. The company has been consistently able to garner higher and higher market share with an extremely high EBITDA per ton of close to 3,500 rupees per ton. If you look at last 1 year, the company has slowed down its growth because of A, macroeconomic challenges, and 2, due to slightly market specific challenges, growth being low in Kerala and couple of other states. And that is why the stock, I think, has come off substantially over last 6 to 8 months. We think there is a significant opportunity to buy this business, when there are a slight macro tailwinds, and that is why the valuations are very reasonable. And if you believe that structural growth in Indian infrastructure, in Indian housing is going to happen, APL Apollo is the lowest cost producer of this commodity, which makes it a very, very strong contender as a coattail to the infrastructure growth that India is going to see. So at these valuations, we see the risk reward is extremely favorable for somebody who is looking to buy slightly longer term businesses over the next few years.
Okay, interesting ideas. Viraj, let me ask you the disclosure on this one as well. Is this also one of your top stocks in the PMS?
Yeah, as I said, all the three are. Okay,
all right. Thanks, Viraj, very much for joining in. We will connect with you again soon. Right now, markets not too much has changed. 10,890 thereabouts, 95 on the Nifty. Jet Airways, as the ticker is telling you, is the one that's really, really feeling the pressure now.